Welcome back. There have been a number of tech companies that have just reported their most recent results. We want to get an analyst take on all of that. Joining us now is Dan Ives. He's a managing director of equity research at Wedbush Securities, covering tech companies. Dan, always great to be able to catch up with you, get your views. We've got Tesla, Microsoft, and Facebook to discuss. Where should we start?
I mean, let's start with Tesla. I view it's a game changer in terms of this quarter. In terms of not just the beat, because obviously we knew about deliveries, profitability. And if you combine that with the trajectory in terms of guidance for the year, I think right now this is a stock that starts to head toward that bull case $900.
Why? What did we learn about this quarter? Revenue beat, earnings beat. What are we hearing in terms of the outlook for deliveries as well?
It's profitability. Because look, as we've discussed with you and the team many times, profitability is the key. They could do this profitably with this type of demand. That really is the 1-2 punch to get the $15, $20 earnings power. And if you look at the level of the earnings beat and the profitability as well as guidance and what deliveries look like, deliveries now for the year, we could be starting to trend to 550K or north of that with China. And that's really the key to the bull thesis here. And I view this as kind of an inflection point quarter.
Dan, when we do, though, take a look at company management's guidance in the past for deliveries, we've often been disappointed, hence why 17% of the float is shorted. Why are you so confident in the deliveries? Actually, your number of 550 is surpassing what the company management is saying, which is 500,000.
Yeah, I mean, look, it goes back to the old Tesla, the new Tesla. You can't argue what's happened to demand. Demand right now in Europe, especially China, that's really going to accelerate. I mean, I think China could be 150,000 K in terms of units alone. So I think that's really the difference makers in terms of the China growth story. And if you look at what they've done the last few quarters as well as profitability, I think this is really a story right now that's starting to break out.
So with respect to profitability, what can we and what should we be thinking about? Where are the margins? There's adjustments to the numbers. What do we need to know about in terms of their profitability, true profitability, and true cash flow generation?
Yeah, I think best way to think about this right now is how quickly they could get to $15 earnings power. That's really what the stock's being valued on. Right now, Street kind of has 2024, 2025 in terms of $15. That could be moved forward potentially 2 years. So that's really going to be the focus of the conference call, later tonight in terms of the profitability trajectory and also that balancing act with growth, especially in China.
Dan, I just want to pick up for 1 second here because you're talking about an earnings power growth story. When you take a look at what they did report today, they reported an adjusted number. Is there anything within those adjustments, because I haven't looked closely enough, that we need to be cognizant of, because not everybody's going to believe the adjusted part?
Yeah, and look, and to that point, the haters hate it at 250. They'll hate it at 600, right, in terms of the adjustment. So there's nothing anomalous here that I point to as sort of giving them an extra bump. I mean, I think apples to apples, this was just a clean beat on profitability.
Okay, so you are bullish on Tesla. And where you think the price target? Well, I don't know where your price target is now, but you can see the stock going to $900.
Bull case, 900, and I think this quarter now it starts to put fuel in the engine toward that number.
Okay, let's move on. Microsoft, you said during the commercial break you've been covering that stock for 20 years. You think it's one of the best quarters you've ever seen?
Yeah, I mean, I'd say, look, in 80 quarters, if not the top 2 or 3. I mean, if you look at this on cloud, just to give numbers, they beat our number by 1,000 bips. So, I mean, just start to digest that. I mean, they are just gaining such significant share versus Amazon, AWS. You're just seeing a massive renaissance of growth at Microsoft, obviously flowing to the bottom line, a core 20-cent beat. And I think Microsoft's a name. I think that stock has a 2 in front of it in the near future. And you look at this quarter, this really is sort of an affirmation in terms of what's happened on the cloud story at Microsoft.
Meaning what? What are the fundamentals of that cloud story, just to remind our viewers?
fundamentally 30% of workloads are in the cloud globally. That's going to 55% in the next 3 years. Amazon won the first stage. Next step, it's Microsoft. You look at that. Microsoft now, in terms of core cloud growth, you're seeing that grow 50, 60% growth. So now what's starting to happen is only 15% of the core customer base is upgraded to cloud. That's why right now they're really starting to benefit. You're starting to see the leverage, and you look at what was at one point a 5% grower, now a 10% grower. For $1 trillion plus market cap company, where I think continues, we're only halfway through the re-rating on Microsoft.
Okay. Let's then also take a look at Facebook. They had a beat on the top line, a beat on the bottom line. They've got 2.5 billion users, according to the fourth quarter press release. Doesn't seem to be quite good enough for investors in the after-hours market. Stocks down maybe 6% or so.
Yeah, whisper. Street want to see a better user beat in terms of relative to what you saw. Remember, stocks up 50% over the last year. Want to see an upside on the user beat as well as monetization. They're going to be cautious in terms of guidance, which Zuckerberg typically is. But I think on fundamentally, if you look, the stock was baking in more of a beat. Instead, it was more of an inline quarter. You'll see a knee jerk in the stock down.
So what do you do with it? If you own Facebook, what do you do with it today?
It continues to be, you buy it. Because in my view, FANG names go up another 25 to 30%. Forget all the scary headlines. It's a re-rating and it's a risk-on environment, and you continue to own FANG names. Obviously, Apple being our top pick, but we continue to be super bullish. And anytime these stocks continue to dip, in our opinion, you own them. That's sort of been our view over the last few years.
Why will we see the continuation of a re-rating for the FANG stocks?
It's a 3% IT spending environment. Growth across the board, as you see in a lot of sectors, pretty choppy and obviously under pressure. Look at tech. Cloud growing 18%, cybersecurity 20%, social media, you got 5G upgrade cycle. So the growth trends are in tech. And in terms of the re-rating, it's because investors more starting to recognize they're going to pay up for those multiple. That's kind of been our call the last few years, and I think that re-rating continues to happen. Remember, the skeptics are going to continue to be there. The skeptics in Facebook at 130 will continue to be there at these levels. The skeptics in Microsoft, 50 points ago will be there. But in my opinion, in terms of tech, continue to be overweight, especially on large cap on these names going into 2020.
Dan, what do you have to expect, though, as it relates to the business models and therefore the profit that can support some of the valuations? Perhaps, well, I was going to say less so on Microsoft, but that's not true. It's all of the valuations across the board for tech. What are you so confident in with respect to a Facebook as an example that will occur to warrant these valuations? Other than liquidity in the market, the Fed's got your back.
One other than there's 2.5 billion reasons why Facebook can do that, because they continue to own that platform and own the monetization. No different than Google on search. So I think it just comes down to they're going to continue. They'll have quarters where they don't significantly beat in line. But if you just look at the monetization of the platform, the user growth, and the valuation, in my opinion, these are stocks that continue to go higher, even though you'll see volatility around earnings, which I've viewed as an opportunity over the last few years.
Dan, where do you think money managers are with respect to these FANG stocks, whether it's tech investors, hedge funds, long-only guys and girls? What do you think? Where are they? I guess I'm really trying to ask what you think their positioning is. Are we going to see additional buyers in these names?
I think many were not as overweight as they need to be going into year end. And you're seeing a catch up right now. A lot of skeptics on these names. You're really fighting the trend. And I think now you're going to continue to see many playing catch up just in terms of where these stocks are going. And I think ultimately if you look at earnings season, especially in tech, I think it gives just further credence to that thesis. And I think that's, in terms of from a positioning standpoint, that's what I love. I don't think these names are crowded, and they continue to be almost under-owned in some pockets. And I think that's where you're going to see more institutional buying on dips.
In terms of buying on the dips and putting new money to work, Dan, rank order your stock preferences for us, if you could.
Apple continues to be number one. I view that as a $400 stock by year end. I view Microsoft number two. And then you got to play cybersecurity theme. Favorite way, in my opinion, to play that is Zscaler, ZS, cloud cybersecurity play. That's a stock that's getting re-rated, playing the cloud theme. Those are our core three.
Okay, Dan, we'll leave it there. Thanks so much for your time today. I know it's always busy during earnings season. That's Dan Ives, Managing Director of Equity Research at Wedbush Securities, covering tech and media.